Let's speak about the newest EV going public via a SPAC, Canoo. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the hoodie to prove it. And today we're going to be speaking about another new EV company. I've been getting asked about this one an awful lot as of lately. I can now say I've done my due diligence and my mind is made up on the company. So obviously with these companies that are only recently after announcing the fact that they will be going public via SPAC, there's not the most news in the whole world about them. The best resource we have generally is going to be the investor presentation. And in all credit to these guys, their investor presentation gives an awful lot of information. It is a little bit of an interesting company. If you haven't done any research into them yet, basically they're going to have a subscription model in regards to their vehicles, which is almost one of the biggest unique selling points that these guys have. And it could be a good thing or it could be a bad thing. We'll get into why later on. But anyway guys, I don't want to waste any of your guys' time. So right before we get into the video, can I please ask you to smash a juicy like on the video? It would mean so much to me. It really helps me and the channel out. If you're new around here, hit that juicy red subscribe button, join the family, people, and drop me a comment down below. Let me know what you think of the company. You know, if you've done any due diligence, let me know where you stand. And also, don't worry people, I'll speak about Workhorse on Friday, okay? I don't want to make videos on them every single day. I know that's what the people want. Friday will be the next one. With that being said, let's get into it, baby. So the first thing I want to do is I want to show you this video here. It's the first thing I watched about the company in general, and I just took down a few notes on what my initial impressions were. First of all, the CEO. This is obviously the CEO right here. He didn't come across particularly excited. Now, that's not necessarily a bad thing, okay? That's just the personality that some people have, but personally, I'd like to see some personality to my CEO. We've seen it with a lot of the big EV companies. Obviously, Elon Musk springs to mind straight away. The man has more character than anybody. Even the likes of Thomas Healy, you know, with Hyliion, he has a lot of character. Steve Burns, Lordstown Motor, comes across really well. Dwayne Hughes, you know, they all have character. And the only other real thing I took from this video was the fact that they plan on having this subscription-based service by the second quarter of 2022. Aside from that, my first impressions of the company were just meh. If you've been around the channel for a while, you know that when I look into a new EV company that's going reverse merger, I always really like to have a look at the investor presentation. And credit where credit is due, this is a really good one, and I'm just going to try to bring you through some of the more important parts. We're going to come back to the proposed transaction summary a little bit later, but first of all, what do they actually do? So this is what they've done so far, okay? Canoo at a glance, disruptive EV company. The company overview, they offer modular, purpose-built EVs to solve the future of mobility. Developed the flattest and lowest profile skateboard, this little fella over here, in the industry that enables a variety of vehicle configurations, as we can see right here. They're priming themselves for explosive growth. They have a partnership with Hyundai to co-develop a future electric car platform. They reached beta in only 19 months, which is impressive. Headquartered in LA, and they launched in 2018, so very new company. Now, the 3 phases of revenue streams. This is what you really need to understand what the next few years for this company is going to look like. So right now, okay, engineering services. So electric vehicle concept design and engineering services for auto EMs and other strategics. Revenue is expected to grow in this segment at a compound annual growth rate of 39% over the next 4 years or so. B2C, okay, so this is 2022, and this is what most people will think about when they think about Canoo. A no commitment subscription program that includes a vehicle and other services bundled into a single monthly payment, okay? And that is expected to have a compound annual growth rate of 147%. I'm not going to say whether I think that's ambitious or not, but we will see a little bit later. And then B2B, 2023, Canoo delivery vehicle and Canoo skateboard licensing. So that's an upside opportunity. Now, in regards to a delivery vehicle, I think this is going to be a little bit odd. There's already a lot, and I mean a lot, of competition out there in regards to EV, both completely electric, like Workhorse, or hybrid. And they are out there now, and they have proven vehicles. And they said this is supposed to have a compound annual growth rate of 100%. Now, I do think that this is obviously a growing market. I don't know if this is going to do much for them, guys. But anyway, that's not for me to decide. This is what they are saying. So, Canoo's foundation, the skateboard. So, this is an independently drivable rolling chassis. I've had a few people in a few videos ask me what a chassis is. It came up in a few Workhorse videos. Literally, all of this, guys, is the base frame of a car, carriage, or other wheeled vehicle. So, this is their thing right now. So it's the flattest and lowest profile skateboard in the industry, enables minimized footprint, maximized interior volume, which we will see later on, and highly modular configurations while cutting development costs. So I mean, obviously it sounds good. So the vehicle offerings, okay, so this is what I want to speak about the most. This little fella right here, because this is what a lot of people are speaking about, and it's kind of the main thing we have to look forward to over the next couple of years. So a 250 mile range, a charge time of 20% up to 80% in 28 minutes, very good, a nice top speed, and a 7 passenger seat capacity. Target launch is Q2 2022. Now this is available exclusively through a subscription program that bundles the vehicle and key services, and it targets young professionals. Really guys, I don't know what to make of this subscription service just yet. I for one know that if I'm to buy a car, I want to buy that car. As it is, a car is an asset that loses value over time. With this, you just lose everything that you put in when you're done with that vehicle. At least with a car, when you're done with it, yeah, it may have lost 30-40% of its value if you've held it for a few years, 5 years plus. At least you're getting something back towards the next one. Whereas with this subscription service, I understand it might help some people, and I understand it says they're targeting young professionals. Personally, don't really like the idea of a subscription service, but that is just me. Then we already touched on the delivery vehicle, okay, 2023, that is what it is. A sports vehicle. In 2025, okay, really? Like by 2025, there's going to be an awful lot of very well established names, Tesla being the very obvious one. And keep in mind guys, throughout this whole video, I'm a big bull on EV. I'm in 5 EV companies right now. Tesla, obviously because it's Tesla. NIO, because they're in China, okay? I know a lot of people think different things about China, but I like what NIO are doing in China. Workhorse, last mile delivery, okay? Drone technology, a lot going for them, not even to mention the USPS contract. Lordstown Motors. In the pickup truck game, it is quite decently saturated right now, I won't lie. But the price they're at right now, the valuation they're at right now, with the amount of pre-orders they have and the market they're in, I think they will perform very well, not to mention the massive plant they have. And then also Hyliion, who I think, you know, offers a great service, and also the merger coming through soon could see a massive bump in price. A company like Canoo, to me right now, they don't have that same appeal. And while we're on that topic, look at the stock's price. It's barely gone up even once this was announced, 10-15%. It went up to $11.93 for a SPAC, which isn't very good. And since then, it's also came down 12.7% nearly, and is sitting at $10.50 at the end of yesterday's day. There could be an argument made that, you know, the risk right now is really low. I mean, the odds of this going sub $9, very low, and the reward obviously could be there. And we can see that it is trickling up pre-market today. It's up nearly 5%, which is obviously a good thing, but the lackluster response we've seen to this company would worry me from the start. Now that's not to say that I don't think we could see what we've seen with so many SPACs and see some crazy drive to the upside in a matter of a day or two. But yeah, this is just something I wanted to point out, the price action that we have seen. Okay, so now that we understand the basics a little bit more, I want to bring you back up to the proposed transaction summary, the very start of the presentation. So Hennessy Capital Acquisition Corp IV, that's who's actually doing the merger, okay, announced a business combination with Canoo Holdings. The transaction, inclusive of over $300 million PIPE financing, is expected to fully fund the equity finance requirements for the Canoo B2C lifestyle vehicle to start production. So if that's to be true, that's very good. You know, they are going to be in a good short-term position. There's a pro forma enterprise value of about $1.84 billion, implying a 0.79 times EV 2025 estimated revenue multiple, which again, quite nice. Existing Canoo shareholders will own 71.5% of pro forma equity. That's better than some SPACs we've seen. And the transaction is expected to close by the end of this year. The transaction is expected to result in about $607 million of cash proceeds to Canoo to fund its commercial development and growth plans. And I want to make sure I give all sides of the story. So this is what Canoo has achieved in 2 years. So it took only 19 months to design, engineer and manufacture a beta vehicle. Only took a $250 million investment to reach beta. They develop and own proprietary technology and therefore are not dependent on external licensing, which is a good thing. It's an asset-light business model, which is true, definitely. They have strong relationships with global leaders, which is always a good thing, but is also a given. Now, the subscription business model with potential to deliver highly attractive returns on equity, and they have a highly experienced team. So it's being advertised as a lifestyle vehicle overview, and it says total passenger volume. Honestly, it does not really worry me, okay? Length, again, it's fine. Wheelbase, again, it's fine. Not very important. Cubic feet of passenger volume per foot of length, okay? They have the best. Obviously, it's a good thing. It is a good thing, don't get me wrong, but is it the most important thing in the world? Now this, the delivery vehicle. So the first quarter of next year, the project is to start with estimated serial production by the end of 2022 and revenue by the start of 2023. Now again, maybe I am biased because I'm so heavily invested in Workhorse and I really like them, etc, etc, but it does seem like there is a lot of competition that is more established than this company in the market already. Now, what I will say again, to be fair, is the 200+ mile range, that's very good, and that is better than a lot of competitors. But it's kind of in a weird range. I mean, last mile delivery doesn't need it, and any sort of decent mile delivery will need more than that. So I'm not sure if it offers much of a competitive advantage, but it's definitely not a bad thing, to say the least. I mean, having to plug it in to charge less often, even that's a positive. So I mean, the sport vehicle, honestly, out of everything, this excites me the least. The first sentence it says on it is it's smaller and shorter than the Tesla Model 3, but with capacity far greater interior space. I mean, fair enough, but I'm not buying one of these, I'm buying a Tesla Model 3. And I think the large majority of people will as well. Okay, so the subscription service. So it does make it clear from the start that it's not a car swapping model or a rideshare company. So there's a minimum term of 1 month on these vehicles. And they do say here that there's a growing demand for subscription models. And I mean, yeah, that's fair enough, but I don't think that there's going to be any stage in the future where the majority of people who own a vehicle are going to be, you know, subscribing to it. Like I said earlier on, people want to own their vehicle. For me, the biggest reason is, at the end of the day, it is still an asset. Yes, it's a depreciating asset, but still, you get something back for it at the end. And as well, a lot of people have cars as status symbols, you know, especially a lot of people who spend a decent amount of money on their cars. They want to own it. They want to be able to show it off. What are two things that people show off more than anything? Probably their houses and their cars. Now, don't get me wrong, there definitely will be a market for it. But how big is it going to be? Like, is it going to be worth investing in this company to one of the other EV startups? So, I mean, here's what it entails. There's no upfront fee, pay month to month, no dealerships, access to insurance within an app, maintenance included, public charging included, registration included, all obvious stuff. Subscription versus leasing. Now, this is the other thing. Okay, there's no upfront payment or breakage fees upon contract termination. The minimum term of 1 month. Again, how many people want a vehicle for 1 month? No dealers and direct to consumer. Tesla do that, and you don't have to subscribe to them. There's a digital first experience. Look, a lot of companies have this now, people. Includes benefits within monthly payment price, yep. And Canoo keeps the vehicle for an entire life cycle versus sending to resale auction after a lease ends. So this is good for Canoo, but it doesn't do anything for the consumer. So I mean, this is how it works. You apply for the subscription, you receive your Canoo. You drive it as if it's yours. You enjoy the subscription, okay? And you return it when you're ready. Again, guys, I don't think this is how cars or vehicles in general are going to work in the future. And guys, let's keep in mind, okay, it's a car. You don't just randomly buy a car. People put a lot of time into choosing their car. They put a lot of time thinking about the financial aspects of it, you know, what's going to be the best value for money. And anybody who has any sort of idea of how money works will realize that a subscription based service is not that. And they actually say that here, okay? So a subscription model can generate an estimated 4 times margin on each vehicle compared to a direct sale. Which again, in an ideal world, that's fantastic. And it makes sense. But will there be the demand? I'd rather sell 10 times as many cars and have a quarter of the margin than a tenth of the cars and have 4 times margin. And I mean, it literally says it here, you will essentially end up paying more for the vehicle and you won't get anything back at the end of it. I mean, if there's a lot of stupid people in the world, then this will be fantastic. But I think the majority of people are smart enough to realize that this doesn't actually benefit them very much. So here is the summary of the financial projections. And what I really just want to look at is the total volumes of vehicles sold, okay? So 2022, 10,000. 2023, 30,000. 2024, 60,000, 95,000, 150,000. I'm not exactly sure where they're getting these numbers from, but by 2026, that would lead them to a revenue of $4,127,000,000, which would also be a 76% year-over-year growth on the year prior, which was a 64% before a 70% before many 100%, and it would leave them with a gross profit of $1.17 billion, and their profit margins seem to stick around the 30% or so range. Now, even that investor presentation left a few questions in my mind. Okay, one of them obviously being how much does it cost. Now, this wasn't updated in 8 months, but it just says we're working through important details to bring you the most affordable, hassle-free membership possible. And guys, the price will be extremely important. I mean, extremely important here. It will have to be so affordable that it's crazy. Again, if anybody has any sort of common sense about them and they realize that, you know, in the short term, yes, you may save a little bit of money if you don't want the same car for, let's say, 3 years. But if that subscription is expensive, okay, it would just make sense to buy the car. You know, it would even make sense to get a loan, pay interest on that loan, sell the car and pay off the loan. You would still be left with money left over. With this subscription based model, you won't be. You cannot physically buy the vehicle if you want to. It will be offered by membership only. And an article from June 18th, the Canoo founder leaves the EV startup ahead of next year's launch. The founder and first CEO of Canoo is leaving, and it just says he did so in order to pursue other opportunities. And then it also says he left for personal reasons according to the company. Just a few months before this, he and Canoo were sued by his wife for discrimination, harassment, breach of contract, and wrongful termination. The lawsuit is currently being settled. So he subsequently moved into the role of chairman and spent his time trying to raise more money for Canoo. So I mean, do with that information what you will. And keep in mind, we have to think about the skateboard predominantly right now. So one of his early goals with Canoo was to sell that skateboard for other automakers, setting up a second line of potential revenue for the company. In February, Canoo announced that Hyundai and Kia were the first car makers to agree to this. Through terms of the deal were not disclosed. So there is, relationships here. There is sales being made. But there still is a lot to be answered, and it has to be answered soon. So guys, what do I think altogether, and do I plan on buying? Now, first of all, I already have an awful lot of exposure to EV. I am a massive bull on EV, and I really love EV. I have to say that as of this moment in time, Canoo does not interest me. Now, does that mean that I can't see it being successful, and I can't see it being worth way more than $10 a share? Most certainly not, but for me personally, I would rather put my money elsewhere. Again, at these prices of $10.50, there is very, very small risk associated, and we all know what can happen with these mergers. But even at that, I just don't want to put my money into the company. It's not even that I necessarily feel, unsafe doing so. I just think there are far better opportunities out there right now that, will have way more news coming out in the next 1 month, the next 2 months, that have even bigger, more established partnerships that will have more of a market share over their respective markets. There's just nothing that got me super excited about this. Now, I can see why you would be, and I can see why people will invest, but for me personally, I'm out. But anyway guys, there we have it. That is my thoughts on Canoo going public via the reverse merger with HCAC Capital. I know there's always some people who tend to get upset when I'm not really bullish about any of the new EV companies, so please don't be. I'm just trying to give my opinions, and absolutely everybody is entitled to their own opinions, especially if you go ahead and do your own due diligence. And as always, my opinion could change down the line. I could end up doing some more research, some significant news could come out, and I could change my mind. But as of right now, this is how I'm feeling, and I am not planning on getting involved whatsoever, even at these current prices. And again, that doesn't mean that I don't think they can go up. There are so many EV companies coming to market every single month, okay? You do not have to get involved in all of them by any means whatsoever, people, so don't feel pressure to. And please do go read that full investor presentation start to finish. It won't take you that long. There is some stuff I didn't include in the video. And again, I would expect some relatively big news to come out over the next month or so. It generally does with these new EV companies when they announce that they are going public. But yeah, thank you all so much for watching. If you did watch until the end, you, my friend, are a true legend, and I sincerely hope that you enjoyed the video and got some value out of it. I thank you so much. If you did stick around till the end, please hit that juicy like button and subscribe if you're new around here. That helps me out massively, and please do drop me a comment as well. I'd really appreciate it. And with that being said, guys, I hope you all have an absolutely fantastic day. I will see you for the next one. Peace.